Welcome to yet another episode of India Ratings and Research Podcast. I have with me Rajashri, Associate Director at India Ratings and Research, along with joining Sonam, Vora, Senior Analyst, and Vinit, Gala, Analyst at India Ratings and Research. Today, we are going to discuss on Financial Year 24 Mid-Year Structured Finance Outlook titled Stable Economy Recovery Continues to Support Securitization Transaction. I request Rajashri to set the context and take the discussion forward. Over to you, Rajashri.
Thank you, Amit. To start with, India Ratings and Research expects asset performance to remain neutral for most of the securitized asset classes. This means that the performance is expected to be similar to that of the past year, that's FY23, and in line with the agency's original assumptions for this year. The rating outlook for the agency-rated transactions is also stable across all asset classes. This is largely driven by the continued improvement in the economic activities, because of which the collection efficiencies also remain at par or even higher than the pre-COVID levels. We'll start with the market overview and performance. My first question is to Vinit. Vinit, what kind of volumes have you witnessed in the first half of FY24? And where do we expect the volumes to be by the year end? Also, how have the rated transactions performed in the last quarter?
Sure. Thanks, Rajashri. So looking back at the first half of FY24, the Indian economy, as you mentioned, has seen continued improvement in economic activities, which again was aided by government initiatives, including the boost for infrastructure projects. The total securitization volumes were up 45% year-on-year to around 1,000 billion for the first half of the year. Looking forward, we expect that with the increasing financial requirements for NBFCs, securitization is expected to remain a major liquidity and funding avenue alongside meeting priority sector lending, which is PSL requirements for banks. The annual volumes of FY24 is expected to reach pre-COVID levels. Further, securitization provides additional security to the investors in the form of credit enhancement alongside providing higher yield on investments. Now, coming to the second part of your question. So in terms of the rated transactions, we have seen continued performance, which are well within our initial expectations during the first half of the year. The collection efficiencies across the asset classes have remained consistent in the range of 85 to 90%, aided by stricter pool selection criteria as well as structural mitigants added by the investors. And in terms of the performance that we expect by the end of FY24, we are expecting a stable performance given there is no drastic relaxation in the pool selection criteria on account of improving market conditions.
Right. Thanks, Vinit. My next question would be to Sonam. How would you say the investors' perception has changed with respect to the unsecured asset classes in recent times?
Sure. So India Rating has observed increase in the proportion of securitization of unsecured asset class in overall securitization since past 2 years, and it has surpassed pre-COVID levels in first half of FY24. Some of the reasons for increasing the investors' appetite for unsecured segment, other than the higher returns, could be the established underwriting practices followed by the originator. Also, due to technological advancement and availability of database, traceability of the borrower has improved, and non-cash collection method have eased the collection processes for lenders. That being said, there may be slowdown in growth of AUM in unsecured loan segment, given the recent RBI mandated increased capital adequacy requirements for this segment. However, within securitized pool, we have observed that the collection efficiency and asset quality have remained well within our expectations so far. Given the continuation of strict pool selection criteria and availability of different structural mitigants, we expect the proportion of unsecured asset class to continue rise in overall securitization volumes.
Okay, thank you, Sonam. Now, moving on to the specific asset classes, Vinit and Sonam, could you tell us a bit more on the outlook for the different asset classes being securitized?
Sure. So let me start with the commercial vehicles, which is the asset class most securitized in Indian ABS market. The agency continues to keep a neutral asset performance outlook for vehicle loans for second half of the year. The outlook reflects government's strong push for infrastructure and construction activity that is driving growth along with favorable business cycle despite the global economic tailwinds. Operating margins for borrowers are expected to be supported by a continuous improvement in freight rates and stable fuel prices in the domestic markets. The improvement in the e-way bills as well as the IIP indicator recovery for this sector. while the performance for microfinance asset class has been kept on an improving outlook. This is backed by the overall asset quality in the sector that has been continuously improving post the pandemic. India Rating expects this trend to continue during the second half of the year. The disbursements as well in the MFI sector, which had dropped during the pandemic, have been continuously picking up ever since.
Right. And adding to Vinit's point, outlook for unsecured business loans and personal loans also remain neutral given the increase in spending capacity of individuals, the ease of loan availment processes along with flexible prepayment charges which have encouraged an increase in the personal debts. Consumer confidence indicator also suggests consumption and saving to remain steady in near term. Other asset classes like tractors, home loans and secure loans also remain neutral at out.
Right. Thank you, Sonam and Vinit. Now to wrap up, Vinit, could you help the listeners with what to watch in the remaining half of the year?
Sure. Firstly, the impact of advancements in technology deployment of NBFCs from sourcing, collections, and monitoring processes, and how it would add to the efficiencies is something to watch out for. Additionally, any material changes in the underwriting practices for the unsecured loan segment specifically in search of growth and its impact on overall asset quality will be a key monitorable for the sector. At a macro level, in case there are any fuel price fluctuations on account of slowdown and geopolitical tensions globally, as that may have some impact on certain segments of the pool would be a key monitorable. Lastly, any relaxation in the pool selection criteria on account of improving market conditions and its impact on overall securitization asset quality would be something to be tracked upon.
Thanks, Vinit. That's all from our side today. Back to Amay.
Thanks Rajashri, Sonam and Vinit for taking us to the report. It was really insightful. The link to the report is shared along with the podcast. I highly recommend to have a look at it. It's a podcast brought to you by India Ratings and Research because for opinion on risk and credits, India comes to us.